What's up, guys? Today we're gonna do a short recap. It's been a long day, so let's get right into it. Today's profit day was $48. It is the $48.13. My best profit day so far since I begun the small account challenge. And we are officially back at our break-even point of $2,017. We began the challenge at $2,016. So we're back at break-even because we had that really bad loss that put me a couple steps back, but between Friday's profit day and today's profit day, I rebuilt it. Now we're back at our break point. Now today was actually my best day far, and not because I just had my best profit day. It actually wasn't because of that at all. Today's day was actually very interesting because today we only had 6 fills, 6 orders. 3 times we bought, 3 times we sold. And if you see here, we had a total of 75 shares at all today, at an average of let's see its average. No, incorrectly. Today let's conduct the average of 1.95 plus 1.87 plus 1.76. That divided by 3 will give us 1.86 times 25 shares, no, times 75 shares, gives us $139. Now, 48, so I only invested $139 today, $139.50. And I made $48.13. So $48.13 of profit divided by the amount of money that we invested, which is 139.5, is equal to 0.345 times 100 will give us 34.5%. Meaning that I today achieved a 35% return on the money that I invested in. To put this into perspective, 35% times my account value of 2017. Wait, no. 35% in 2017 divided by times 0.35 plus 100. Meaning that, no, yeah. Meaning that if I put my entire account of $2,000 into it, I would have made $700 today in the trade. Now, I'm not going to do that for obvious reasons. But I made this is just an example to show you that I made 35% return on the money that I invested today. Which is the real reason that today was such a good day. Because 35% return on only, and keep in mind, let's see, 2017 is the total value of my account, right? If we take, how much money did we invest? 139.5 divided by 2017. I got 35% returns using only 6.9% of my total account. So we did 2017 times 0.069. Yes, so only using 6% of my account, I was able to achieve 35% returns using that 6.5%. So using only 6.5% of my account, I achieved 35%. Interesting. I achieved 35% of that 6.9%. So that is really what's interesting today. So without further ado, those are the statistics behind the math. Now let's get into the actual trading. So number 1, today's day, this was the only gapper in the morning that we had. So what I do? Market is about to open, and market opened strong. So what am I seeing here? First of all, I'm seeing the A, B, C, D pattern. We see it here, and I see it all the time as I'm playing these moves, right? A, B hits a high, C, it comes back down to volume weighted average price, it consolidates, and D, it shoots up. Now, this is your typical 5-minute pullback. I call it the ABCD because it helps me define it. So we come over here, it pulls back, and it shoots up. However, and on the 1 minute, you could have played a small little bull flag, a small little momentum play right here. You could have used this 1 minute high and seen the support here, and you would have bought it at the open for the break. However, I did not do that. Why? Because I don't trade right at the open. That's too volatile. Any slippage could cost you dearly. Meaning if you get in 2 seconds late, you get filled at a horrible price. I don't do it. I take my patience. I'm waiting for the 5-minute setup. So 1 minute stock, it shoots up. I refuse to get FOMO'd in, and I do not get FOMO'd in, which was a great idea because even though it took off, like I'm thinking to myself, okay, it's okay. I'm gonna wait for my opportunity. So ended up getting halted right. Ended up getting a 5-minute halt right here. Resumed here. After this, came back down. After it came back down, I drew my resistance line. Let's remove our little halt right there. Remove my resistance line. Came back up again, and I still refused to get FOMO'd in. Why? Because this setup wasn't clear. It's not, you can't really predict any pattern. It just looks like a W. Looks like a zigzag. It's not, there's no flow of movement. It's too sharp. It comes up here quick, comes down. Matter of fact, I just realized that the screen is going to be too small for those watching my videos, so we're going to increase my screens right here. So we're still focused on the 1 minute for now. We're still focused right here. So like I was saying, shoots up, then sharps right back down, then shoots right back up. We don't see any consolidation process. We don't see the sellers slowly getting bought out by the buyers. We don't see none of that. And the volume doesn't really convince me otherwise. So I'm not liking the setup. So I hold. I don't do anything. By that time, we're already here, right? So it comes up again, and it comes back down. I'm like, okay, I'm thinking to myself, whatever. Comes back down. Once around this area where it already it came back down here. I think it was around here or here. Around this area, I'm thinking to myself, I want to wait for a 5-minute pattern. Here on the right side, we're waiting for a 5-minute chart pattern. Something that we could really analyze our risk-reward ratio and get it at a good price. So we see the drop here, and then it comes back up, and then it drops right back here. I think to myself, okay, let's see what opportunities it have. And then it shoots right back up, and I'm thinking to myself, okay, wait a minute, we might actually get a break of this candle. So it breaks, and it comes back up. So at this point, I also refuse to get FOMO'd into this price point right here. So normally what I would do in the past was that I would get FOMO'd and buy right here as soon as this red line gets overtaken by the green candle and just buy in just because it overcame it. But that's the old me. That's not the new me. The new me waits for an opportunity, even if it takes off without me. But there's going to be a pullback, an opportunity. So I see it come back down again. And I see this is the key pattern that I saw. I'm thinking to myself, two things. Let's remove this. Number one, this is our resistance area. Our resistance area. Why is it in gray and not a red line? Well, because as you see here, this stopped right here before the red line. So wait, let's activate this a little bit. So we include that, boom. So we put a gray line because sometimes resistance doesn't always follow a line. Sometimes it follows areas. Just like here, this resistance area still affected here, even though the stock overthrew it a little bit, but it's still in that resistance area. So that's why I have the gray line. So at this point, I drew an ascending support line. I'm thinking to myself, hey, we see this momentum moving, and it's kind of going to break. And what do I have here on the 5-minute pattern? Oh, look at that. I have a bull flag. This is a bull flag, a strong move upwards, sharp consolidation toward the side, and a sharp move up again. This is different from the ABCD, even though they're similar patterns, just the ABCD is much more rapid, right? So as we see, let's look at the 5-minute here, right? The 5-minute, the ABCD, strong momentum up, trades sideways, relaxes, comes back down a little bit, and then shoots up. Bull flag, on the other hand, shoots up, strong consolidation to the side, shoots up again. So the bull flag is much more volatile, it's much more rapid, much more momentum, and there's more volume. And it usually happens at the open because the bull flag is essentially just a sped up version of the ABCD pullback, of the ABCD pattern. We have an ABCD right here, and we have a bull flag. So let's just visualize that right there so everybody can see it. A, B, C, the lowest point of the consolidation. Edit properties, alignment to the right. This is B, edit properties, alignment to the right. A, edit properties, alignment to the right. And D is the official break of that previous B level. Where was I? D, where the momentum just takes over. Alignment to the right. So that is the ABCD. And you could essentially also incorporate that ABCD pattern into the bull flag. A, B, C right here. D, just the bull flag is just much more rapid. It's not needed. We just use the horizontal lines. We would use the low of this candle right here. So the whole point, I don't really do these ascending patterns, but I draw them just so they can help me visualize that the supports are building up. They're building up into a breaking point, which would break above this 1.8 area. So on the 5 minute, I see the clear bull flag. I'm thinking to myself, okay, this is bull flag. I could get in here. So then I switch my attention to the 1 minute to identify where is my best entry point. Now, I see the resistance here at overtaken, and it didn't crash all the way down. Instead, the support kept building, as we're a higher point here than we are here. So now we're going to enter our position. And I chose to put it at the first candle to make a 1 minute high for my entry, to then play the 5 minute bull flag. And my first entry was at, and this was on live too, 1.76 at 9.50. At 9.50, 9.58, 9.59. Okay. So correction. I actually did end up buying at 9.50 here for the break here at 1.76. So I brought it the resistance. I only added 25 shares because I wanted to start scaling in for the break. That's correct. So I didn't get FOMO'd into it. I added light size to see how it would react. Then it came down. However, I had my stop loss at 1.6. I had my stop loss at 1.6, and it came back down. And as soon as I noticed that ascending support is when I added at 9.58 for the break of this 1 minute candle. Right for the break. So you see how once they come up, they crash down. And once they come up, they crash down. And once they come up, oh, it trades sideways, getting ready for that slingshot up. And as soon as it's about to slingshot up, this is the candle to make the new high, meaning to cross the previous low. As we see here, it comes down, goes sideways, breaks that level. We're getting in here, and that's what I did. I got in here. We're gonna remove this zone. We're gonna remove this as well. This is to visualize the ascending support on the 1 minute. So now we're at the 1 minute. Okay. We're going to switch our attention to the 5, and we're going to see that we ended up shooting up and getting halted. Showed on the 1 minute. Boom, we got halted. After we got halted here at 1.94. The stock resumed. I added again at 1.95 at 9.59. So at 9.59, right here, I added at 1.94. Add here, added for the 1 minute break, added right before the halt. So to visualize my entry points, added a light position at the break, resistance. You can do resistance buyouts, just light position. You know, you want to prepare yourself. You don't want to go crazy at the resistance just in case you get flushed down. So buy here. This was the best entry, however, this entry for the 1 minute, for the break of the 1 minute high. And then I entered again here. And then I rode the wave up through this halt all the way up to 2.6 where I eventually sold. I sold my first shares at 2.19, which was right here, because you have to take profit at some point. 2.19, so I took profit here, and then I sold the rest here. And if you see on the once you're trading these halts, I was looking at the 5 minute, but they didn't really, they were essentially, it's essentially the same thing. Just on the 1 minute, you can see a little clearer. Now, if we remove everything, we're gonna clear my drawing set. You see how this kind of looks like an ABCD? A. Kind of have an A, B. We have the C right here, and then the D. A, B, C, D. So these patterns repeat themselves, whether it's on the macro, the 5 minute, or the micro, the 1 minute. What is today's take on it? Today's take is that we traded the 5 minute pattern using 1 minute and 1 minute chart for entries. That's take number one. You focus on the 5 minute pattern. Once you see that 5 minute flag, 5 minute ABCD, as I saw here, once at this exact moment was when I drew. It was at this exact moment on the 5 minute chart that I analyzed a potential bull flag pattern. Strong move up, sideways move, ascending support. We're going to slingshot back up. That is what I analyzed at that current given moment. So, analyze the 5 minute pattern, use the 1 minute charts to identify entries, and identified little micro patterns that could help you support the 5 minute pattern. The 5 minute chart setup. My bad. Take number two. Only possible because we traded the alpha stock of the day. We were trading the best stock of the day. You trade a shitty stock of the day, you're gonna get shitty results. I waited for a good opportunity. This opportunity came to me. Take number three. I had my best profit day with the least amount of money I invested on any given day. In this challenge, I used only 6% of my account today and achieved 35% returns of that 6%. Is that how you quickly say it? That's 6%. Using 6% of my account, I achieved 35% results. 35% of the 6%. Makes sense to me. So I use least amount of money to make the most amount of money, which is what we're doing here essentially. And adding here this 1 minute high and a stop loss here was a good risk to reward ratio. You see, we had small risk. Our risk was, well, whatever. Our stop loss was here. Our entry was here, essentially risking like 15, 17 cents. Reward was here and here. This is how much money we could lose, how much money we could gain. That covers today's game plan. So that's take two. What is take three? We already went over focusing on the 5 minute chart setup. Do not get FOMO. I could have gotten FOMO on any of these moments of highs. I could have gotten FOMO'd. Could have gotten FOMO'd here. Could have gotten FOMO'd here. I did not. I waited for my time. Take number three would be, well, I'm just be prepared. Be prepared. That is today's video on RNAS. Again, here are my orders from 9:50 all the way to 10:15. Today I was on the computer for approximately an hour and 30 minutes to receive the best profit day so far. And tomorrow we will repeat these results onward until we grow a small account challenge. Thank you all for watching.